Get the latest Zacks research, analysis, and rankings on exchange-traded funds in Exploring ETFs. Now we're going to learn about the most popular ETFs for the beginning of 2013 with Eric Dutram. He's our ETF strategist at Zacks.com. You've got some interesting data here for us. You say that it's been so far a solid start to the ETF year, huh?
Yeah, well, obviously the surge in the market has definitely helped, but we've seen about $30.5 billion in inflows into the ETF space.
Wow.
And most of this has been in equity funds as investors kind of embrace the whole risk-on environment and they pile into some higher beta plays.
Is it just since the new year?
I mean, it was kind of starting up in the last quarter once the debt ceiling issue was kind of figured out. But
okay.
Kind of before then, it's kind of an uncertain footing, and investors were still piling into a lot of lower risk bond products.
Right.
So it's really kind of been a switch over to the more riskier equity funds instead.
Okay. So what types of funds have seen the most inflows then?
Well, the biggest winners have been in the foreign ETF space with VWO and EEM, and these are two very popular emerging market products, actually the two most popular out there. These have seen the bulk of the inflows, and we've also seen DXJ, which is the Japan Hedged Equity Fund. Mm-hmm. That's seen about $2 billion in inflows, and that's largely thanks to the weakening yen in Japan and some new moves by the government to kind of curtail the yen's rise and kind of boost the stock market as well. So investors have really been smartly, in my opinion, flowing into this product for Japanese exposure.
I always try to discern the logic behind the trend. Can you spot any reason why the foreign ETFs have done so well?
Well, I think after the end of last year, once investors saw that, hey, the world's not going to end, the market's kind of coming back a little. Mm-hmm. They thought, well, if it is coming back, why not go to some higher risk places that have kind of been beaten down and could, if the market continues to go up, do better than the overall market. So I think it's really a look for higher risk products, and some of the ones that had been beaten down in the past, like the other fund on this list, EFA, mm-hmm. which focuses on Europe and Far East securities. And obviously with Europe's issues, past couple of years, investors are starting to say, hey, why not take a little risk in the portfolio mm-hmm. and look to some of these securities instead.
Okay, what about on the American side?
We've been kind of seeing a rotation in the U.S. market. Small caps have been very popular. IWM and its leveraged counterpart, actually, UWM, have both been in the top 10 for inflows so far this year. So that's been kind of a big shift away from the large caps. But don't worry, some of the large cap funds have been seeing some inflows too, such as VIG, which is a dividend-focused product, and VNQ, which is a real estate investment trust ETF. So it hasn't been a total push away from risk. It's just kind of a nicer mix.
Okay, I'm glad you told me not to worry because it would have been consuming my mind. There had to be some losers.
Definitely.
So far, right?
Yeah. Surprisingly, actually, SPY, the S&P 500 ETF, was actually the biggest loser so far this year, seeing about $9 billion in outflows.
Really?
Yeah, and I think it's really been a shift away from this product and into the IWM, which is a Russell 2000 product, and some of the foreign ones that I highlighted earlier. So it's kind of been a rotation away from the safety space and into the riskier products. We've also seen that with GLD and IEI, which are both lower risk products as well. So it could be somewhat of like a rotation away from bonds and safety and into the higher risk equity products.
I see. All right. Own any of the ones you talked about?
I do own VWO and IWM for my portfolio.
All right. Well, Eric writes some other interesting articles regarding specific ETFs and the ETF space in general. You can access those most recent articles by going to our website, Zacks.com, scrolling down the homepage until you get to the ETF module, and then clicking on any of those story links that are in that module. It'll take you right to the ETF section of the website. With Eric, I'm Terry Ruffalo.